the more competent we become, the more confident we are. And what's understood don't need to be explained, right? So when I go out and raise capital, oftentimes nobody asking me for a portfolio or previous deals that I've done, because I show up in the marketplace and I convey things in such a way that they clearly know that I know more than them in this particular area and I'm somebody that can help them.
Yeah, my question is really how to find some of these properties. I've been trying to do a little bit of wholesaling and all, and I did find properties, but it was difficult to find buyers. I don't know if it was because of the area or just the time right now. People are just a little, tight with their money, or things are just getting a little expensive.
It could be a myriad of things, quite honestly. Okay, it could be the type of property that it is. In general sense, if you're struggling to find buyers, the easiest thing to do is to link up with other wholesalers in your market, because more often than not, they already have an avenue to a buyer's list if you don't have that yet. Now, yes, you may have to profit share and give up 50% of your deal, but 50% of something is better than 100% of nothing, right? So it's a greater place to start until you can start to build up your own buyer's list as well. The other thing to factor is, and I don't know this, Isabella, so I'm purely speculating. Is it a good deal? Right? We have to make sure that we're proficient at underwriting deals to where we know our end buyer, which I don't know if it was a flip you were trying to wholesale or a cash flow property, but in either case, we need to understand what that end user, what their position is. Meaning, so if I'm renovating a house, I'm renovating it to a standard of whoever's going to purchase this home as the home buyer, right? If I'm wholesaling a property to a flipper, I need to understand what's their return on investment, so that I know I'm giving them a viable opportunity to where they still got enough margin to then go out and do what they need to do with the property to sell it to the end buyer. If I'm wholesaling a cash flow property, I need to understand what the thresholds are so that the investor, I can go into their mind to understand how much money could they make. And I only know that if I understand how to proficiently underwrite deals. Okay. So I would look at that. I think that's a strong consideration in making sure that the deals and the way in which you present them, that they have enough meat on the bone for the investor to still go out and make some money.
You say that you find or maybe I find a buyer, but how do you gain that trust? Because I'm new to this. They might have been in the business 10 years to say, well, I'm going to give this person that's barely in 2 months 50,000. What suggestion would you have for that trust there to give
Yeah,
somebody to give you a lot of money
building trust with who?
with another, someone that provide me the money, someone that an investor, excuse me, an investor, because I don't have the credit to go to a bank for 100,000. So to somebody just to say, yeah, sure, I barely met you a month ago, you expect me to give you 100,000. That's, what.
Yeah. No, I get it. So the thing that we all have to remember is the more competent we become, the more confident we are. And what's understood don't need to be explained, right? So when I go out and raise capital, oftentimes nobody asking me for a portfolio or previous deals that I've done, because I show up in the marketplace and I convey things in such a way that they clearly know that I know more than them in this particular area and I'm somebody that can help them. But it's not manufactured confidence. I'm confident because I put in the work to become competent. I continue to invest in myself and refine and evolve my skill set. And so what you feeling is 100% valid. The more that you learn, though, the less you're going to feel like that. And what happens is when we show up in the marketplace and we start having premature conversations with said investors and we don't exude the confidence that we should, then our uncomfortability also makes them uncomfortable, which is why they'll never invest with you.
I'm interested in investing in apartment buildings.
Okay.
So could you, of course you could, but would you let me know how would I go about starting to even, get the funding to do that, to get into apartment buildings? I know you say to raise the capital but just walk me through and let me know what would be the first thing that I would do.
Can I share something with everybody real quick as far as like what the success movement looks like in life? And I promise y'all this ain't self-serving, right? Like I'm gonna get into a bunch of stuff this week. I'm telling y'all this because this fundamentally is how you're gonna be successful. It has nothing to do with me trying to sell y'all anything. I promise you that, okay? But the 4 keys to being successful is number 1, to first have a desire, which everybody here clearly has that, right? Secondly, is to go out and get educated. To go out and get educated, okay? The next thing after that is to become a practitioner. Faith without works is dead. You got to go out and take the stuff that you learned and apply it. And then lastly, if you do that long enough, you become an expert. You better sit in this chair and have conversations with great people and show them how to do what you've done. So I say that because it's so important, because I can give you situational advice, right? But in order to get the foundational stones to really go out and complete the process is not going to be off of that situational advice. It's going to come from having systems and processes and a pragmatic approach to be able to build your business and have long-term upside, okay? So the first thing would be, because to your point, right, everybody think that money is the issue, but money ain't the issue. Knowledge is the issue. It always is knowledge, is never the money, right? People with money go broke every day because they bypass the knowledge piece. People make money in one setting, right? They go to work. They've been very prudent, keeping their expenses low, income high, build up this nest egg. They're like, I got 200-300 grand in the bank. I'm about to go buy an apartment building. But they never learned how to buy an apartment building. They just saw that they have the affordability and the credit worthiness to go out and buy an apartment building. And they quickly find out after they lose all their money that it was never about having the money. It was about they lacked the knowledge. If you get the knowledge, you will have more money than you will ever need for your deals. And that's why we're here this week, because I'm going to show y'all that emphatically. Like, you will have more money ready to invest with you than you will have, than you will even have opportunity. And so that's the person that you want to become, right? The rest of it is tactics. The biggest strategy is you actually learning everything that you need to learn so that you can show up a value. Because here's the other part. When you go out and start getting money from people, it's a great thing. It's one of the biggest blessings in your life, but it also could be the biggest curse. If you show up and you're not ready to properly steward over their money because you don't really got it all figured out, that's the quickest way to gamble with people's money, and that's the quickest way to find yourself in trouble in business and life and otherwise. And I don't say that to discourage anybody, because I want y'all to break through the strongholds of feeling uncomfortable and uneasy about going and procuring funds from people. But I want to let you know that there's a grave responsibility on us on who we need to be and how we need to be before we ever go out and do that, okay? So the first thing that I would say in that education process is to learn how to analyze deals, to learn how to get proficient at underwriting your deals so that when you're sending them over to a lender ain't the one telling you whether you got a good deal or a bad deal, right? So, you know, Isabella asked about building trust. You build trust by showing people you already know what you're talking about. The more that people have to correct you and teach you along the process, makes them not trust you more. Not that they don't trust you as an individual. They don't trust that you can be the one to take it to the finish line for them, because they're constantly having to plug holes that you have in your conversation, right? People with money, while they may not be an expert in real estate, they're expert in money. And so they understand the money language. They understand when somebody can conceptually take things from A to Z, even if they don't have enough working knowledge of it. I can hear somebody conversation about tech, and I'm the furthest thing from a tech guy to understand whether or not it makes sense. Because money understand money talk, right? And so they'll ask certain qualifying questions that you could ask anybody in any industry that if you don't know the answer to, they clearly identify that you ain't the person. So it's always about, you know, going to analyze the deals. And because here's what investors want to know. As much as they want to know the upside, they want to know what's my downside. And if you don't know how to effectively analyze deals, you can't tell them what their downside is. When I give an investor a pro forma to look at, I'm actually not only showing them the upside, I'm answering their objection before they even get to ask me the question. I'm showing them in the pro forma what the downside is. Here's the worst case. Your money gets stuck in this deal. This is what your return is going to be. The best case is We actually, everything go according to plan. We refinance and get you your money back in this time allotted, and then your return is X. So I'm giving them both. I'm giving them dichotomy of both because I already know that they're thinking it anyway. So the less that they got to ask me because I already anticipate their questions, the more that they know I know. I know the language, right? And so as long as they know that I know the language, then it's time to go ahead and talk to each other. And I know that may have been more of a contextual answer, but I just want everybody to get clear on that because, you know, you ain't going to gamble your way to success, but you will risk your way to wealth. You will take calculated risk to risk your way to wealth, but you never gonna gamble your way to success. And so there is no on-off switch. It's the 4 moves I just told y'all: desire, education, practitioner, expert. You do that and don't break your rhythm on that, you will be successful. I don't care what it is. It could be hair coloring. It could be making an album. Like whatever it is desire, education, practitioner, expert, and you won't fail. But if you go from having a desire to being a practitioner, you probably gonna run into some big problems. I just want to see y'all do it the right way. You know what I'm saying? And it's my responsibility. If God sent y'all here to have this conversation with me, I'd be doing y'all a disservice to just give y'all this hocus pocus, like, yeah, go do this. I'm making you armed and dangerous just enough to go out there and get yourself in trouble, right? So while everything I may say may not be sexy and sensational, but it is real and it's practical application, and I see the fruit of it from not only my business, but my students, when they follow the same philosophy, they also bear the same fruit. We underestimate what we can do in 10 years and we overestimate what we can do in 1. But it's getting the fundamentals. It's the basic blocking and tackling. It's looking at deal after deal after deal and evaluating and knowing on the back of a napkin in 30 seconds whether a deal is a good deal or a bad deal, just by having very little information. When you get to that point, oh, now you own to something. You own to something. And then you could do whatever you want to do. You could do apartments. You could do single family, small multi. You could do whatever you want to do because it's all just understanding the dynamic of what asset class you're investing in. I'm going to start buying hotels next year. I ain't never bought a hotel, but it's a formula, right? And so by the end of Q3 this year, I'll be in the education phase getting prepared for whatever that's going to be next year.